Alright, hello everybody. This is Mr. Anderson, True Crypto 28 on Twitter. Hope everyone's doing well. Today we're going to go into a little bit different subject. Normally when I come on, I'm doing things that are technically related because they're easy to do. It's very easy to show a technique here or there and spend an hour or less in showing one or two techniques. And of course that's what everybody likes, right? The reality though is that trading psychology is 90%, in my opinion, of trading, and if not, it's certainly a more significant part of trading than the technical side alone. Now you need to know the technical just as well. I mean, ultimately you want to know everything that you do in trading like the back of your hand, but the trading psychology element is significant. Now normally I don't even get into too much of the trading psychology until further along, and that's why I haven't made a video about it just yet either. But it is something that eventually, once you want that to become the center of your trading process, and we're going to get into that deeper. You don't have to understand that right now, but specifically today we're going to talk about 5 psychological changes that need to be made to become a successful trader consistently. You know, the first thing I'll ask is, you tell me, I mean, ultimately, are you familiar with a situation where you see other traders and you're thinking like, man, that guy has to be making money, he seems like he's on the right side of the trade all the time, and I'm not. Do you have, maybe you have days, you have weeks where the money's coming in, but ultimately you're not able to maintain that performance, or worse, you give most of it back. Maybe you give it back regularly. Maybe you're able to get yourself to a position to make that money, and you find that you're not able to cut your losses, you give it back. If any of that sounds like you, and you know that other traders are out there making money, the kind of money that you're thinking about making, the kind of money that you want to make, the kind of money that might even seem like a pipe dream at times, the reality is it's all about getting on the right side of that trade and doing it regularly, which we'll get into. But ultimately, if you're spending countless hours, boring, endless, repetitive market study hours of just going over this formation and that formation and the other, and you're looking at a screen for 12, 14, 16 hours a day, I can assure you that's the wrong way to go about this. 100% it's the wrong way. Now, maybe you're going to spend that time investigating different aspects about your passion, which is trading. That's fine. And of course, in the beginning, there's so much technical information that you do have to acquire, or would be helpful to acquire, that it makes sense that if you're just working harder, great. But at the same time, we want to work smarter, right? So there's some caveats in there to where, obviously, I'm not oversimplifying it to tell you not to study technical analysis. Of course, you want to do that. But we'll get deeper into that as well. The idea, though, is that a lot of people, they make the same silly errors over and over again. They basically say, you know what, this isn't working, so I'm going to try a new method. That's not working. Let's get into another one. Oh, you know what, this guy claims that that's working, so let's go ahead and invest in that book and that book. And they got 25 different books of technical analysis. And the reality is they feel like nothing's working in the end. Maybe it works for a little bit, and then they feel a little bit lost again, and they come back to a position to where they realize, like, my goodness, I don't know what I'm doing. Or maybe you have an indicator that you tried out and thought it made sense, and hey, here's the RSI, and here's stochastic, and here's SMI, and you know what, look at this, I now have my moving averages. I got 15 moving averages, I got crossover. You ever see like this thing right here, where someone has a screen like this? And God bless them. Some guys, if they can make it work, more power to them, right? If they're killing it every day, week in, week out trading, and they have a screen like this, so be it. It's not that it can't work. It's just that, one, it can work easier, and two, this definitely doesn't work for everybody, right? There's just no way that most people are going to get themselves in a position to be like, oh yeah, I'm looking for the 45-degree angle at the time that the derivative of my Fibonacci hits at 1.27. No, it's a bunch of nonsense, right? So, and again, it's not that it can't work. It's just that it's not going to work for the majority of people that are trying to become successful traders. You might also feel like, hey, you know what? I have a ceiling. There's like a roof. Maybe my account. Maybe you have an account that's made it up. And I'm not talking about this bull run. Let's just focus on trading here or whatever market you trade in recently. Maybe in your last 6 months, 12 months, you feel like I have a ceiling of some sort. Even when I'm doing well, my account might get up to 70,000, and then I bleed it back for weeks. Or maybe it's 200,000, and maybe it's 4,000. It doesn't matter what the number is. Your pile is your pile for now, so don't worry about it. Once you learn to trade, it will grow. But the point is that if you feel like there's literally a ceiling that you just can't get past, then ultimately that's why we're having this conversation as well. So usually you're going to have a situation where one of these things apply. And the reality is, in my opinion, what it is that you have to put yourself into a position where you have to realize, you know what, I'm probably viewing things all wrong. It's a perspective element, right? There are things that you must change. There's a saying that says, to change your life, you have to change your habits. If you change your habits, you've changed your life. And it's very true. You think about it, you're late every day, right? You get up every day at 7:30 a.m. and you mosey out and you get some coffee and you pick up a paper. People still do that, I don't know, but whatever it is, you turn on the TV, who knows what you do. But ultimately, you do all these things and you realize, oh my goodness, I have to be somewhere at 9, whether it's work, a meeting, or anything along those lines, and you always show up 5-10 minutes late. Okay, well, let's change your habit. Let's get you up 30 minutes earlier. One thing's changed. The first thing you're going to do when you get up is you're going to jump in the shower. 2 things have been changed. The next thing you're going to do is you're going to already have your clothes laid out the night before. 3 things are going to be changed. And you're going to get dressed immediately. 4 things are going to change. And then you're going to walk in and immediately make your coffee. You've changed 5 habits, right? So with those 5 habits, you're now ready to leave at any moment, ready to walk out the door. So there's no chance that you're going to be late, unless now you're just completely foolish in deciding that you're going to still put yourself in a difficult position. But the whole point is, by making those 5 little changes, suddenly you've created a circumstance to where now you have an hour and a half of free time, which you can say, all right, if I set a little alert and I have to be out at this time, as long as I just follow that extra step, I'm never going to be late again. So that's the kind of concept that we're talking about. It's like, look, let's change some habits to change your life. And in this case, it's trading habits. And I'm not talking about technical, because we're talking about psychology today. So, in my opinion, there's 5 changes. And there's a lot more, of course, right? We're just touching on a subject. But there's 5 specific that we're going to get into that you want to make a change on. Commit to those changes. And then ultimately you're going to put yourself into a position to start seeing things differently. Because that's, in my opinion, what it's all about. Try to, I have a mentorship, coaching type program. And the biggest challenge I have is that I need to bring people into a position to where they see things differently. Because I believe that everyone that struggles with the market truly doesn't have the right perception of the market. And of course, if you're staring through the market with one eye closed, squinted, it's going to be very difficult, right? So I go through a process in which it's a slow process intentionally, so that my students, and once some of them are watching, they fully understand that a little bit of a Jedi mind trick, right? Where I bring them through some steps, they might not even know exactly what they're doing, and then suddenly every one of them says, aha, wow, okay, I'm getting it. I didn't see this. I understand what's going on. Maybe they didn't understand, but all of a sudden, everything's suddenly different. And the reality is that's going to happen dozens of times, so that you can truly grasp and understand what the market actually is, because it's usually very different than what your perception of it is. So that's what we're going to talk about here. So ultimately, what's the first change? All right, well, change 1, and I'll go ahead and put it on the screen for you as well, but the very first thing is we're going to say we want to function in a manner in which you're going to take full accountability for your trading. I'm talking about 100% consistency. Like I said, I'll put it in here as well. Let's go ahead and add this here. You know what? I'll make a new one. Right there. Here we go. We'll start it there. Okay. Function in a manner. If it's too white, I apologize. Function in a manner in which you take full accountability for your trading. Commit to 100% consistency. Mr. Anderson, what are you talking about? I'm talking about no excuses. No crying. No, the market's manipulated. No, I lost money because a whale dumped. No, Bitcash sold. Or excuse me, Bitcash had a war over their fork, and that's why I lost all my money. No. Not, hey, the guy I follow on Twitter, he gave his entry, but he didn't tell me that he exited as soon as he realized that, hey, you know what, that trade was going against him. Wrong. 100% full accountability. 100% consistency. Well, what does the consistency mean? All right, well, you have a set of trading rules. For an entry, you're looking for something that's in an uptrend, or something that's in a downtrend if you're going short. This doesn't have to be your rules. I'm just making a point. But perhaps it has to be above a certain moving average. You'd like it to sit on support. Whatever your trading rules are, make them whatever you'd like them to be. That's fine. But the key is consistency is sticking to that plan, no matter what. You follow me? Not falling for a trap. You know, what's a trap? I'll change my trading rule a little bit just this one time. I don't have to stick to my stop. I can let it go a little bit longer. I got a feeling. My gut's telling me it's going to change. It's going to roll back over. I can feel it. You feeling me so far? You understand where I'm getting at? Oh, wait a second. I can chase here with no research. Why not? It's about to break out. You know, that's what these guys thought, right? I can chase here. Look at this. We're going higher. We're going to get a higher close. Full accountability for your trading. When you lose, it's on you. And it doesn't have to be that big a deal either, right? It's not the end of the world. But you're responsible. By the way, when you win, God bless you. You're responsible too. If I'm your coach, you don't have to give me credit. I don't need the credit. Understand? Take full accountability for your trade. This is a massive, massive undertaking. Most people can't do it. Their mind is wrapped. They really believe. Look, I'm not telling you that markets aren't manipulated, but they're not manipulated in the way you think. And there's no reason to have an argument over this. We should be friends, right? We can agree to disagree, because no matter what, whether you believe it's manipulated or not, you should take these words and commit them to memory and believe them and trust them. And absolutely no matter what, even if it was manipulation, take full accountability for your trade. Say it was my fault. I did something wrong. I can correct it. I can learn from it. I got to see if it was just a minor issue, or did I stick to my guns and did everything right. So be it, or maybe I have to adjust my plan. It could be 100 different scenarios, but the accountability is on you. You will be shocked to find out what happens when you start to make these type of changes. I mean, you're going to be in complete control of your money. You understand? When you're in control of your money, you have a sense of power now. Even if it's losing money. Because when you feel like you have a control over that account balance, regardless of anything else, you're going to be in a situation where you say, you know what? I'm the one that pulled that trigger. I'm the one who decided to enter the market. I'm the one that decided to liquidate myself. You know, this type of accountability will help you in your growth. Okay? And in fact, all of the things we're talking about, you know, if you basically make the changes that we're going to talk about, you're going to feel that complete control element that we're trying to get to, that freedom. Because eventually, once you master these techniques, and it's not something you're going to master today, you're not going to utilize this tomorrow and start winning. It's going to take time, right? The mindset alone takes time, and then it's a process of identifying the proper techniques of how to get into that. And it's not as simple as a little TA video, okay? So I won't lie to you. It's not easy. It's going to be difficult, but it's the difference between trading moderately successful, and being extremely successful in your trading. Okay? And trust me, that element of control and knowing, you know what, I'm never going to lose money without knowing why I lost. That's the beauty about it. When you're accountable, you'll be able to identify why. When you follow the rules that we're going to give you, you're going to be able to identify why a trade went against you. And sometimes it's just, hey, wasn't meant to be. You know, the setup looked good, wasn't meant to be. And that's okay too, because overall you'll be making money. So that's the focus. We'll get into that later again. I'm going to keep saying we'll get into that later, because we are going to get into those, and I don't want to jump around too much. Obviously, I'm speeding up a little bit of my conversation just so that I can try to condense the video so we don't put a 2-hour video up on YouTube. But the idea here is this. You're going to be in a position to where you realize that that invisible ceiling on your trading wasn't even there to begin with. It never was there. We're going to work on that, okay? We're going to talk about that so you have a full understanding that there is no limit to how far you can go. Does that mean you're going to be super rich and make 100% of your trades correctly and rich by 2020? No, maybe you will be. Some people listening will. Others will take some more time. Others just need to add some income, and that's fine too. All right, guys. So, what was I talking about? I was talking about taking full responsibility for your trading. No excuses, right? So we want to get into a little bit more because I want you to explain. Excuse me. I want you to understand some of this. The reality is this: by holding yourself to like a higher standard, you're gonna be in a position to where you cannot operate the same way as before. You know, you're gonna have to make that change. It's not easy, but the change is always in the direction of lasting success. You understand? We talked about the example. We say, look, you know what? We're not getting up on time. We're not making it to work. We're not making it to our meetings. We're not making it to our business that we own. It doesn't matter what it is. We have to make changes to correct that issue. And it's the same thing here, right? Because traders who don't choose to operate this way, they're far more likely to fall into countless traps. I named some of them for you, so I won't repeat that. But the idea is, the reality is, some traps you don't recover from, right? Like the, hey, I'll use 100x because I really feel confident about this position. Let me go ahead and use 100 times margin right now because, you know what, if I'm right, I'll go from 15,000 to 75,000 today. And they start seeing this nonsense dream that really doesn't happen. I mean, in fact, you can almost assure yourself that in that situation, the trade that you're looking for probably is dead wrong. And we'll get into that again. Now, might not even get into that one today, but ultimately I'll touch on something that'll make you realize what I'm referring to. But the key is that you have to start by making yourself accountable. Okay? So that's step one. Step two, probably make you say, what is this guy talking about, right? So here we go, step two. Just gonna pop it in here for you. Stop studying the markets. What? What's this guy talking about, right? What do I mean? Stop studying the market. Wait. Okay. So a noob has to study, right? Yes, of course. A new person to the market, they got to study. You guys have to learn. So we get that. Can you learn more techniques? Of course. But if you've been at it for years already, you're doing this a couple years, and you're studying TA, you picked up 5, 10, 20 books, you watched every YouTube video in the world, let me help you guys out. You know more than 99.9% of all traders from 20 years ago. Do you think those guys can't trade right now? The successful ones can show up and out-trade you every day of the week. Couldn't say that in other markets, but in crypto we could say it's 7 days a week, 24 hours a day, right? They can just show up and out-trade you. I promise you, those guys can easily do that. Well, how? They don't know what I know. They don't understand this technique and that technique, and they haven't broken down every Bollinger Band and every Elliott Wave scenario, and I've studied Elliott Wave for 7 years. And great, good for you. It's not that it doesn't work. We're not saying that. It works great in hindsight. But the idea is we're talking about a specific thought process here, okay? Which is, if I'm studying the markets, I'm making a grave error. And we're going to explain that in a minute again. But the idea here is this. Yes, study the market some. Yes, if it's a passion of yours, feel free to get into it a little bit. We get that. But don't sit here for 18 hours thinking you're going to pull one of these off and come up with the answer. Where, hey, I solved the crime, guys. I mean, for that, then the computers could do it, right? By the way, I love the guys that have these bots, right? The bot trading. And there's nothing wrong with it. They can make you a little bit of money. You spend money on a good one, they can make you some decent money. But have you ever known a guy that, you know, he got the bot and then a week later he was a multimillionaire, and then obviously if that were to happen, then I guess he's a billionaire within a month, right? It's nonsense. And the bots, they do fine. A good one. But my point of bringing that up is that, look, if it was that simple, where we could just come up with this mathematical, beautiful mind type scenario and finally say, oh, I got it right there, this is definitely it, this is what's going to work, I got it. No, it's nonsense. Complete nonsense. It's a waste of time. It is a waste of time. Now, my wife will say, what are you talking about, honey? You're glued to that computer. We try to get you away from it. Yeah, that's true. Look, I have a passion for the markets, right? I have a passion for the markets. I have a passion for looking at different setups. I have a passion for working on indicators and things of that nature, you know, trying to make ones that are better tools. But if you think that I'm sitting here with a Bitcoin chart for 19 hours trying to break down the 400 moving average combinations in every single type of scenario you could think of, wrong. I do look at it, and I'll put some study time into it, but that's not what matters. And we're going to get into that, okay? But the idea is this. If you're studying the markets that much, you have to understand that there's no time to study what really matters, which is what I'm going to get into, okay? And I'll tell you this, my students know this. I don't teach any techniques. I mean, none. I don't teach any techniques that are used by the masses, meaning in the manner that they use them. Why? I mean, are the masses not using all those currently, and are the masses not mostly in a position to where they're long the majority of this path? I mean, let me give you an example. Let's do a little bit of interactive that you guys like. Let's see. Take some of this off. I don't have to get rid of this too much, but actually, you know what? Let me wait 1 minute and then I'll get into this example for you. I apologize. So let me just go ahead and give you the next one, right? And then I'll come back to this particular chart for you. The one thing is, before I move on though, it's just, the fact is this: the markets themselves, they're just the least important thing. They really are. It's hard for people to understand that. I mean, it's very difficult for them to get that because there is an inherent error in technical analysis. Now, look, I'm a huge proponent of technical analysis, so don't misunderstand what I'm saying, right? But I was also an engineering student, so I happen to know a little bit about mathematics. And what I can tell you is, if you're trying to study price to derive price, you got yourself a mathematical equation that simply is not going to work. You follow me? Because you can't derive with 100% accuracy, that's for sure, the price from the price. It doesn't make sense. So there's a huge battle that's been going on for decades upon decades where people say, hey, technical analysis doesn't work. And we like to make the jokes and show where we put some TA out, say, oh, TA doesn't work, look at this, right? Great. But the reality is there's a failure rate that's fairly high, right? Almost to the point of flipping a coin. So there's ways to offset that. I'm not saying don't use technical analysis. Of course, technical analysis has some beautiful elements to it. But there's a lot of complications as well. You might get into patterns. Say, hey, look, well, this pattern has a 68% success rating to fall in this situation. Okay, well, that means, one, that there's still a 32% chance that it's dead wrong. But then the other problem is that patterns morph, right? I mean, I can remember where in this time, I will go ahead and do a little chart information here. Oh, man, there were so many people that were just swearing that this, I shouldn't say I remember what it was. I think they were trying to pull like some kind of A, B, C, D, E. I don't even know what it was. But whatever it was, at that time, there was a scenario where people were pretty confident, like, hey, look at what's going on here. This is going to come. And even started to pop up. So, yeah, we're going to go back here, and then we'll figure out what's happening. And ultimately, that was the mindset of most traders at that time. And then, of course, we know what occurred. And for some that got it right, great. It's not about that. My point is that patterns evolve. They might start off looking like one thing. You have a flag that turns into something else. You might have a triangle that turns into a descending triangle. So there's a lot of different elements that go into play there. So the reality is we don't have all the data. In hindsight, it's very easy. We'd say, yeah, technical analysis works at this percentage for this pattern. Great, because you're going back. Same thing to the Elliott wave, right? The Elliott wave guys, right? And I love them. If you're great at Elliott wave, don't worry. It's not an insult to you. You do what you do well, and that's good. But the idea is that I know that wave 5, this Elliott wave, it was topping out here, right? But some people say here, some say there. But you get an extended fifth, and they can justify it, say, hey, it was an extended fifth. That's great. But at the time, what Elliott wave people were telling you is, do not long this thing. It's going to die, right? Maybe not you, if you're the Elliott wave guy, but trust me, I know what was going on. And that thing ran from 3,500 or so, whatever it was, let's call it here, 4,700 up to 20,000. So you're talking about a 15,000 point move from major people in the industry based on Elliott wave that said, nope, you can't do that. Now, in hindsight, we'd look at it differently. Oh, wait a second, that was clearly an extended fifth, and they're known for going to the moon. Great, okay, awesome. In hindsight, that's not how it worked, okay? So we're going to get into that in a second here because I do want you to know what you do have to study, okay? And then I'll break down some more things on this chart here. So we're not going to study the markets. Why? Because the thing you need to study are the losers. You understand what I'm saying here? I put this out on a tweet recently. Winners study the losers. You ever play poker? What are you playing? Are you playing your cards? Or are you playing the man? What does that mean? Ultimately in poker, if I play my cards, what chance do I have? I'm sitting at a table with 10 people, right? We all have the same chance of getting decent cards. So am I sitting in a 1 in 10 chance of winning that hand every single time based on having the best hand? I mean, that's insane. It's ridiculous. It doesn't make any sense. No, I'm going to look at the losers at the table and try to study their habits, right? There's an old expression in poker that says, look, if you don't know, if you don't know who the sucker or the fish is at the table, then that means it's you. It's very important. Same thing. You need to know in trading. If you don't know where the losers are, buddy, you're one of them. And when we say loser, we're talking about money. We're not talking about any derogatory or insulting type terms. And if you're too sensitive to hear that, then I'm sorry. We got to toughen up a little bit, right? We're talking about trading psychology. We're talking about winning. We're talking about being very positive, so don't take it the wrong way. I know sometimes people in different cultures, they might hear it differently, so I apologize for that if it comes out in that context. But the reality is we do have to find the losers. Why do we have to find the losers? Well, guys, before I get into this chart a little bit, understand that this is a zero-sum game. What does that mean? Well, ultimately, if the market cap's $100 billion, there's $100 billion on the table, right? Let's call it a poker table or whatever you want to think about it. And, we all have pieces of that puzzle. I'm referring to, we're referring to cryptocurrency, of course, but it doesn't have to be crypto. Whether it's forex, whether it's stock market, whatever we're talking about, it's still a zero-sum game. Now, a lot of that goes, if you're talking about forex, a lot of it goes to the big banks and the spreads and all that nonsense. And crypto, a lot of it's going to go to crazy exchange fees and things of that nature. So they're taking out some of that already. So now there's less money for the winners and taking away more money from those losers, right? But you have to know where the losers are. That is your full intention. Again, if it's a zero-sum game, that means that the losers pay the winner. If you make money, let's say you made $60,000 this week trading, right? It would mean that someone else or a group of traders, right, lost or is reflecting a loss of $60,000 from those trades that you made. The difference between where you took the position and where you exited. Someone has to take that debit, right? So you have a job, and the losers write your checks. So if you want to be paid, you better know where to find the loser so that you can go and get your check. You need to collect your money, right? So that's the same idea and concept. So ultimately I said I would get into this again. So let me go ahead and get into it. So before I even get into it, let's look at something. Rounded bottom, right? So just go ahead and point this out. I mean, is it going to be hard to point out a couple of these elements like this? So let's just point out that rounded bottom. So what do we know? This is shorts, in case you're wondering, right? So this is tracking the shorts. Now, unfortunately, this is a crypto chart. We don't have the greatest data. One of the things I don't like, but you don't have the greatest data in crypto. But what do we see? This is a chart of shorts. And we won't stay too long, but we're going to go ahead and look at this right here. Hold on one second, I'm sorry. Make sure I got the same tools. Okay, sorry about that. So yeah, so we won't stay too long, but here we go. We got this right there, and you see a nice, beautiful, rounded bottom that took off. Great, it's hindsight. But what do we look? Even looking at hindsight, and I don't want you to go in and start looking at your shorts and your longs and thinking you're going to figure out the market, because it's not that easy. It's a lot more complicated. Everything's better and easier in hindsight, right? But in hindsight, we can go and check out what were the losers doing, right? So look at this. The people that were losing, because we say the losers move the market. It's not the winners. It's the losers. So look at this. Situation was lower low. You got closing low, and yet somehow this thing was kind of floating a little pop back to even the lower low, right? If we want to zoom in and kind of see what was going on, we can do that real quick. So we could see that here. It was a closing low for the year. Not good. People said, oh, this thing's going to zero. In fact, shorts hit an all-time high. And what took place? You're talking about a nearly, 40, 50% type gain because of the fact that the losers, the late bears, right? We're talking about the people that were sitting here in a situation to where they are basically buried, right? Because they got greedy. And that's exactly what happened. They put themselves in a position to say, hey, no, this is going down to 3,000. Now, hey, we all know that eventually that 3,000 was going to come to fruition, but this was not the time. There's no situation where the majority gets paid off in that type of manner, right? So ultimately, the pain had to come from them. But we can pick many more examples, right? If we're going to give some perspective of what was going on during this bull market, let's pay attention. Give ourselves a position. Let's get the ability to look at this a little bit clearer. So what are we going to find out? Well, let's go ahead and look. Let's see. So this is our short data. Oops, sorry. Bull market. That's what I want. All right, here we go. So, bull market's got to be ending. Look at this. It's going to go to zero, right? Obviously. So look at where shorts were, right? And then look at where they end up going. So what ends up happening? You're pouring gasoline on the fire. Once they kick this thing off, shorts actually started exchanging shorts, right? They were still believers. You could see how that worked out. In fact, you got right here before this higher high, you still had those believers right there. We're only going to focus on shorts just for a short moment, just to give you some perspective. And what do we have? At that time, all-time highs. You see this? And then, of course, what did you just do? You just poured fire on that baby, right? And she started going. But then, it's not like they were going to learn their lesson. Of course not. No, 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 no. They're going to get the short of a lifetime, these guys, right? So what happens? Peak. Nice peak. Look at the relative pop that you would have here, right? And they're peaking it up, and then of course what's that going to do? Add more fuel for another rally. You got that? So then in this case, not like the shorts are never going to get paid. Of course there's some smart shorts in there. So there's some times where they hit, but oftentimes what you see is when you're at a local low, right? Well, in this case they did pretty well, right? You got another pop. That's the one I was just talking about, that sometimes they're going to hit on it. But then you get a quick pop here, so someone has to get burnt. Now these numbers are getting pretty low, but things are smoking, right? They're going off, they're going well. And then every time it peaks, they're in a rough spot. I'll just move this over, you kind of see just a comparison. Shorts get a little giddy, they get roasted again, more fuel, and this just continued on. They just kept going. And then what the interesting thing about this, right? We're not trying to get in precision, we're just trying to make a couple points. But this here was the spot, right? So all of these people, and these were mostly liquidations or really bad losses, but they were all looking for this scenario, right? That's why they did it. And it's not that nobody did it. Some of these guys made the great trade, which would really start right about there, right? But what do we notice? And some of these guys probably took some profits, so good on them. But look at the level. I want you to notice. Look at the level of shorts here versus the level of shorts there. This is 4,600. This is 20,000. Notice how much higher it was here. Now you might say, oh, well, it costs more, so that's why there's less. No, no, no. Trust me, the volume at this point was so extreme, and so many more people were involved, that doesn't come into play ultimately, especially with leverage and things of that nature. What it is that at the wrong times, the masses, the pigs, right? They say pigs get slaughtered. They're going to be in the wrong position. You can just bet on it. Look, over 90% of people lose money in trading, and some say that's much higher. Over 90%, right? That means that the 90% are paying the 10% that are winning. And then within that 10%, there's another group that wins big, right? So we have to keep that in mind. But the idea, though, is this. It's the losers who are often completely in the wrong. And then you'll have a minority, typically, which comes over here, right? See how much less? It's literally less than every example we gave that fueled the bull market. You ended up having less winners. Okay? So take that for what it may be at the moment. Just trying to make a point that, look, if we can find the losers, now again, this is a lot easier for me to do in hindsight, right? But if we can find the losers and where they're at and what they're thinking, then ultimately we're going to be in better position. So we should be dedicating our time thinking about where the losers are. That should be, I want that to kind of sink in for a moment. Okay, I'm going to have a sip of water, forgive me. So ultimately that's the key, right? Find the losers. Can we do it? Yeah, of course. You put all this study into the markets. Why can't you study the losers? Absolutely you can. Winning traders are going to study the losing traders, and they basically are going to learn everything that they need to know about how the losing traders act. I mean, the reality is you know most of it. It's not as easy as saying, hey, just do the opposite of what you do. Of course not. But you can perfect it to the point where you say, you know what, I know why people are piling in here, and I know why they pile in here and there and there. And there might be some technical reasons for it as well. But ultimately, if you can think with that mindset, then you're going to start to be in a better position of thinking, hey, you know what? The losers are the ones that are going to pay me. How can I start thinking about where they're located? Very key. And it's the key of keys, in my opinion. So that's something we want to start to make sure that we do. And you certainly want to start studying the losers more than we're studying the winners. I'm studying the market. That's the key. You know, the other thing is, look, winning traders, we adapt. Losing traders, they don't. Losing trader is so focused on their bias, right? They're so focused on being right. They're so focused on all the things that don't matter, and it creates a real problem for themselves. Ultimately, it puts themselves in a position to where they're so hoping to be. You know, they much rather say, let's say it's this situation. It doesn't matter where it's at. Pick a spot, but ultimately, you know, they want it to be so correct about it being bullish and going. That mattered much more than what seemed to make sense at the time, or what was the highest probability, or anything along those lines. So you just want to make sure that you don't have a bias, and that you're not in this position to where it matters to be right. You don't have to be right. Forget what's right. Find the loser. Do the opposite of them. That's it. And by the way, that won't always win. You might be, you know, I'm going to talk about that in a second as well. Let me go ahead and actually move to that one. Just finding a loser, hey, you know, sometimes those losers get paid, right? It's not always. Guys don't go straight down. Nor am I saying that you always have to be completely on the opposite side. When they win, you don't have to lose. It doesn't work that way either. But we want to forget certainty. What does that mean, forget certainty? Forgetting certainty means I don't need 100% probability for something. You know, the one thing I'll tell you, and it's probably not a good example, but I can assure you this. Winning traders, the guys that are really killing it in trading, they're not waiting for confirmation. That just doesn't occur. I mean, you ever hear the guys that are like, hey, I'm the wick. Now, a lot of them, you know, they're making some of that up, right? They claim that they're the wick all the time. Sure, a lot of those guys get roasted, but some of them really are, especially if they're significantly better than most traders. Then you better believe they are, because they're not waiting for a confirmation on their trade. They're not saying, oh, hey, you know, I want to see it test this particular area, and then once it does that, I'm not talking lower time frames now, but just since this is in front of us, you know, oh, I'm going to have it test a little area, and then I'm going to wait for it to come back, and then I want it to come back to touch that support, and then if it starts to go again, I got confirmation, I'm going to go. Listen, I'm not telling you not to do that. In fact, look, I teach confirmation, okay? I want you to understand that I teach that because early on in your career as a trader, you should definitely utilize confirmation, because you don't have the skill set to not utilize confirmation just yet. So I'm throwing something out at you that's a little bit of a curveball, so I apologize for that. But ultimately, the idea of forget certainty is the fact that, look, if something's 65% certain in my mind, why would I not take that trade? Especially since I know my risk to reward ratio is always going to be some 3-to-1 or 4-to-1. Let me try to give you an example of this, okay? Bring another chart over here. This isn't the greatest example in the world, but it's an example nonetheless, okay? So here we go. What do we got? This is the S&P chart we were talking about earlier. Get some of this out your way. Alright. Don't worry about too much here, but what we do have is, you know, if I had some support and resistance that I felt comfortable in, you know, I would call this a zone, right? To where I have different layers. So say, you know what, I felt comfortable with this one, knew that it could fall in here, very confident it wasn't breaking through here. So what am I going to do? Am I going to wait till it comes in, comes back out, retest the area, then go? Absolutely not. I'm going to ladder in some buys. Again, don't start doing this tomorrow. It's an art form that you have to learn and practice, right? But the idea is you ladder in some levels of buys. Maybe you ladder in 1, 2, 3, 4, 5. Doesn't matter what you're going to put. If you're going to put 1,000, you're going to put 10,000, you're going to put 50,000. Whatever your limit was, it doesn't really matter. You just divide that amongst 5 to 6 or 8 trades, whatever it might be, into a zone that you're comfortable with. Now, if you're wrong and you get stopped out of that zone, then you get stopped out and you move on to the next trade. But the idea is that you're going to ladder it in, and then 1, 2, 3, 4 might get filled if you get a wick situation like this. And then what happens? It's off to the races. And in crypto, we know that can happen very quickly. I'm looking at an S&P chart at the moment. But the idea, though, is in these situations, you're waiting for confirmation? No. I mean, that was the idea that I'm getting at. Is that a professional trader, it's not too often that they're waiting for confirmation. Now, again, that's a little bit different than the technical side. There's a lot of technical scenarios where you want to get confirmation or utilize even a confirmation indicator, and I'm okay with that. Those are different types of subjects, but I'm just explaining to you that, getting back to this example again, just while I can bring it up if you don't mind. Maybe I had 65% confidence in this, right? That was the point of saying, no, I can take the trade here. I don't need it to start moving back the other side, because if I have a 3-to-1 risk to reward ratio, let's say my exit was over here, then if I lose, so be it. That's one loss. Out of 3 times, I feel pretty confident that 2 of those I'm going to win, and then within that 2, I had a 3-to-1 risk to reward ratio, right? So now we're talking about, what, 4 to 6x type scenario over the long haul and taking that kind of trade. We should feel good about such a thing. So that's the kind of thing I'm talking about. Again, these are things we're going to go deeper into over time, but ultimately, if you can get yourself to a position to where you can comfortably say, like, hey, yeah, I feel 60, 70% chance of that occurring. And then the beauty of that is, and of course, be careful, right? Because we already spoke about trading plans and things of that nature. You might draw up a trading plan that says, hey, look, I'm right here, but I might be wrong really close. I'll know. And I'm not talking about stop hunts or things of that nature. Maybe you want to be the stop hunt. You say, hey, I'm going to enter on a stop hunt right about there, because I believe that most people think that they're going to get taken out. And then if it continued down a little bit further than that zone of yours, then you might exit, right? Which would be okay, because you probably catch enough of them to where it's certainly worth the reward. So this is the type of thing I'm saying is, don't worry about certainty. Don't start putting in crazy 10% type scenarios at all. But ultimately, you have to get yourself to a point to where losses are very normal. I teach losses as day one of, hey man, take a small loss, who cares? What does that mean? If I take a loss on, and I'm talking, my losses are small, right? Every time. I don't take big losses. I'm sorry, it doesn't occur. I've been doing this too long. So if I take, I might enter, look, I take trades on Bitcoin where I say, hey, I'm going to enter in a large position, and sometimes I sell it 35 minutes later. Something that I started to see, I stopped seeing it. Maybe I didn't even lose. But what I saw, now time became a factor. I thought I identified a point in time that was perfect, and then 35 minutes later I decided, nope, that's not what I thought, and I'm out. Maybe it was a break-even trade. I entered without certainty, right? But I entered with a huge risk to reward, and then I was wise enough, right, to say, look, I'm taking accountability for my action. It's not what I thought, right? That's in my trading plan. I have a part that says, if it's not what I think it is, cut a loss, cut a profit, doesn't matter, right? And that's a little bit different. You're not outthinking yourself. You got to get to a level. I'm not saying I'm better than you or anything like that. I'm just making a point that, look, there's going to be progressions over the years, and then you might see yourself in that situation. Until that time, be very disciplined in your approach and say, hey, here's my stop. If I enter here, it might be very close, I get out. You want to get into profit pretty quickly generally, and if something's going against you, then apparently we're seeing something's happening that was not what you thought, right? So that's why I say, look, go ahead and enter at the spot that you feel comfortable with, ladder in a little bit, and then if it starts to go below those areas by a decent margin, then look, I was wrong, and that's okay. And if your risk to rewards are in good position, you're going to be in a good spot because you're going to catch things from a better spot instead of getting in here and then waiting for a retest and waiting for the break now. And look, we want to try to catch a part of a run. We don't have to catch the bottom and the top. But at times, you can create a scenario to where you say, all right, I feel pretty comfortable with entering from X, Y, or Z, and then at least there could be a good bulk of that, and then you start looking for an exit strategy that makes sense. Now, let your runners run, of course, but if you start getting reasons to exit, then so be it. So that's the kind of thing we're talking about. So those are 4 of the 5, right? Now, you might have some of those, right? And if you do, cool, that makes sense. That's fine for you. But ultimately, you want to put yourself in a position to where if you have 2 of them, you need the other 2, right? If you don't have any of them, then it's something we got to start working on, of course. And ultimately, that's the key. And then number 5, Boy, number 5. Number 5 is going to be the one where people are going to say, what? This is one I've been preaching for 20 years, so you've heard me say it before. Invest in a mentor or a trading coach. Very important. Very, 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 very important. Look, no one in any field ever has progressed to some significant level consistently. I shouldn't say no one, right? Very low percentage, right? I guess you could have the guy who practiced, surgeries at his house and became a surgeon. That's good. Usually it doesn't work that way, right? Usually they are working on cadavers in medical school and they have the guidance they need. And you might say, oh, well, that's education. I can go to college. Yeah, sure. Well, for one, they don't really teach trading at that kind of level in a college course. But ultimately, it doesn't matter. If you think of someone like a boxer, that boxer has a trainer, and that trainer gets him in excellent shape and teaches him what combinations to throw and what strategy they should use. A football coach, he isn't the QB, right? The football coach isn't throwing touchdowns, but he sure is setting up the plays, right? And telling them if they're doing something right and giving them the extra eye and say, oh, no, you know what? You're lagging here. You're not looking at that. You're missing that read. And if you don't know football, don't worry. But the idea is it doesn't matter. The best golfers in the world, they all have a swing coach. The guys who get cute and decide, hey, I'm not going to use the swing coach, struggle 99% of the time. And what happens is, in trading, by the way, it doesn't have to be me, right? Obviously, I do mentoring, I do coaching, I do trading education, but it doesn't have to be me. Find someone you like. Find someone that you're comfortable with, right? But wrap your mind around the idea of paying someone that you like, that you feel comfortable with, or, by the way, that's kind of like this one, right? The certainty issue. How comfortable are you going to feel with someone? You're going to feel 100%? Maybe. More than likely, it's a 60% type scenario. So 60%, do some research, talk to the guy, feel him out. If you feel like, hey, you know what, I'm going to take a shot, what are you paying that guy, right? Not a significant amount of money. That doesn't mean it's not a lot of money to you. And if you can't afford it, then so be it. That's another conversation. But the reality is this. For 20 years, here's what I've always seen. The guy that comes in, right, and he's never traded before, he is more than willing to invest money into courses. And these courses, Forex course, get a professional Forex course, 10 grand for 2 weeks, right? You get some one-on-one trading with, one-on-one counseling with a professional trader. Sometimes it could be upwards of $500 to $800 per hour. You have to buy a grouping of that, right? Now, it's not the prices I'm talking about now here with me or some of the guys online. Our prices are relatively cheap. People say, how in the world can you do that? It's not the point I'm making. The point that I'm making is this, is that the person that comes in who's a professional, they understand, like, hey, I got to invest money into learning how to become a professional trader. I'm not going to suddenly just be great at this, because it's much deeper than, hey, let me just learn how to do Bollinger Bands, which are very helpful and cool, but if that were the case, I could teach my daughter to do that. Sorry, I could, right? It would just be like game theory, and we could teach, the millennials. All the millennials would end up being traders, and it'd be easy because they're so great at video games, right? But it doesn't work that way. There's a level. 90% of it is this, the trading psychology, right? Then in that 10%, it would be very helpful if you utilize your technical skills better than most. And that's where a coach can help you as well. But the idea, though, is that, when a doctor comes in, he says, yo, Mr. Anderson, hey, I need you to help me out. They know they got to pay you, right? And they don't have a problem with that. It's just talking about not only one specific person, but literally the last 20 years. This is how it's been. But the guy who has entered the market on his own refuses to accept the fact that he's got to pay someone. You'll hear, like, oh, why can't you do it for free? This guy has 22 videos online and they're free. This guy does a daily cast. Great. And I'm not saying some of those guys can't help you. Maybe they can be your mentor. But the vast majority of the time, there's not enough there, right? They're not going at the pace that's necessary. It's not as specific as it needs to be. Some of them might be. And if they will do it for you, then great. That's a good alternative. But 99% of it is not that way. 99% of it is a collection of information that is putting you in the crowd of the losers. Think about it. You've had access to all of it, right? And what happens is that guy was at 100,000 and now he's at 20, and he can't wrap his mind around paying anybody, because now in his mind he's already lost 80,000 and this will be more of a loss. It is the most backwards thought in the world. The reality is It's already cost you $80,000 to not have a coach. You understand? I mean, it doesn't make sense. It would be like if you had termites and you said, listen, I know I have termites, but I don't believe in hiring a guy to come out and take care of my termites. I think that's ridiculous. I'm going to go to the store, get some ordained chemicals from the store that they use. Yeah, they're not as strong, and because I'm not a professional, I don't have the ability to I don't have a license to get those type of chemicals, but I'm going to take care of this problem myself. And you go and you spray and you do all this stuff, and then a year later you realize, wow, your entire deck is ruined. Okay, so you do the same thing again. You keep bumping yourself in the head. You go online, you start Googling, researching, watching videos. Oh, you know what? I didn't do that. I needed a paste instead. I should have did this. I should have did that. And then the next year you realize that now it's not just your deck. Half your house has been eaten. The floor is gone. You have to literally do the entire floor over from underneath because they've just been going to town on your home. Right? Maybe this is a terrible example, but I'm making a point in that if you want to be stubborn and spend thousands upon thousands because of the fact that you didn't want to pay someone who is actually a professional a small reasonable amount of money, that's on you. That is on you. And again, look, this doesn't have to be me, but I'm telling you that ultimately you can find people that can help you, right? And let those trading coaches help because they're going to be able to identify, first of all, start by giving you the technicals that you need, right? In their manner, whatever it might be, but then they should be giving you some of the psychological element. Now, a lot of that comes, usually what will happen is you'll get some technical, and then you'll start to enter in the process of the psychological, and then eventually this becomes the primary focus. Some guys that give you the psychological, no one knows the technical at all, and they kind of do something where they just focus primarily on price alone, and sometimes that can work if you got a natural skill set, but the flaws in their games come from the fact that, again, they're still concentrating on price as opposed to concentrating on the man, right, on the loser. Now, if they're concentrating on the loser, but yet they're calling it price, that's okay. But usually, if those guys are looking at price alone, they're going to get themselves into some difficulty at times. Now, there's some guys that are great at it. Good for them. If you want to learn from them, you should. But the idea is that you can learn. It's there for you. You have to be in a position to where you say, you know what? I'm more than willing to do this. I'm more than willing to get involved and get the guidance I need, not to mention the fact that you're going to shrink the time down drastically. Now, my students will say, well, this guy, he likes to take his time, which I do. I want it to sink in, right? We're going to take a slow process so that it's full comprehension. So if it does happen to be me, get used to that. We're going to basically jump in, give you a ton of material, but I want you to really take that material until until you understand it to the back of your hand. I mean, for people that see some of my videos, you might see, hey, this guy has an RSI video, he has a MACD video. That's good. But then what I do is, with my students, they end up seeing that video, and then also we go 5 layers deeper, right, to where they see the one video and you say, oh, MACD, that's interesting, and then we do another or maybe 2 or 3 more that really gets into the specifics of the technical side of how we should use that particular tool or another. And you get responses like their heads are going to blow up. They're just shocked from what they see, because unfortunately, look, the masses, they don't use these things right. I'm sorry, they don't. People don't spend the time they need. You look at something like RSI, and people like to frown on RSI. It's a terrible tool. No, it's not a terrible tool. You're using it wrong. Sorry. If you think RSI is terrible, I apologize. You don't know how to use it. I'm sorry. Now, if you think that RSI also provides terrible assistance to people because it's been portrayed wrong and people utilize it the wrong way for overbought and oversold, things like that, then you're 100% correct. But if you truly believe that that's a useless tool, I'm sorry, you don't know how to use it. Anyway, it doesn't matter, right, ultimately, because the reality is still that doesn't matter. Things like the technicals aren't the most important element at all, because we need to study the loser. The reality is, brought up an example of RSI. I had that up here. I didn't get into it. A lot of times with the RSI, as an example, let me try to clear some of this out for a moment, if I could. Actually, let me do it a little bit differently. Thank you for your patience. So, what do we know, right? So, in this type of situation, we might know that the loser's thinking what? This is an RSI. Got to go into something like I'm on this chart. Forgive me. You know what? I don't want to start changing charts and getting this into a longer time frame. But on the low time frames, if you take my word for it, this particular thing would be just gassed. I mean, if you want to go back in time and look it up, feel free. It's mid-July. But you're going to be on a 4-hour. You're going to have an RSI that's just flying, right? So what happens? You start getting people that decide that, you know what, I'm going to rev up the shorts here, right? In the face of this roaring monster, these guys, let me give you a visual perspective so you can understand how these things play out. So here we are, RSI, and this is what those guys that hate RSI are talking about, is that on a 4-hour, this is probably in the 80s or something, and everyone thinks, oh, overbought. It's overbought, right? The shorts pile on in, right? They pile on in. What happens? They get roasted, right? They pile in like that, and they get roasted, and then it goes up even higher. So here you are, you're probably over the 70s for sure, in that 80s, and boom, now you're definitely in the 80s on the 4-hour or the lower time frames. And then it happens again on a lower level. You can see it happen again. You know, smaller scale for sure, but still happens as these guys get crushed down again, where you see it just going lateral and then poof, one last top. So these are the type of things we're talking about. Like, hey, can we know how the loser's thinking and then help to find some ways to identify how they're going to move the market? Because the losers move the market, period, always. The winners don't move the market, the losers win the market. Move the market, excuse me. Anyway, this is going very long, of course. I'll do a review real quick. Hopefully you guys seen a little bit of glimmer of something a little bit differently here. We're talking about the 5 psychological changes that need to be made. 1, function in a manner in which you take full accountability for your trading. Commit to 100% consistency. It means you're not going to break your rules, right? You're going to have a trading plan. You're going to say, I'm responsible for all my trades, not the guy next to me, not this guy on Twitter, not this guy in my Discord. By the way, my group, you know, we're going to have a Discord where we talk and things of that nature, but in reality, and I hate to say this, but you know, one old trick that I've done for many years, going back 18 years or so, sometimes I don't know where the market's going, right? And I want to get a read on the market. One of my biggest tricks is to go into a trading chat room. And I don't talk, I just listen. And then you start to hear people give their opinions. And usually if we have a group that has a strong opinion, I know to fade them. I'm sorry, that's just how it is. You know, the guys in the chat rooms, the majority of them are typically wrong. It's a terrible thing to say, especially if you're one of them. It's not an insult, guys. I don't mean to put it that way, and it is true. You know, ultimately, utilizing that kind of information is helpful. You could find out a lot, to find out that, hey, you know, sometimes I'll take polls. I don't take the polls for this reason. I promise you, I just kind of do it because, you know, most of us are Bitcoin maximalists to some degree, and we like to kind of see where the market's going, that type of thing. But when we get a poll that's significant, like 80% or more, you could almost be certain it's going to be wrong. If they're saying something with 80% certainty, you can be assured that's exactly the situation we're talking about, where unfortunately the people are piled up in one direction, and the people with the money already know that it's going the other way. The winners already put their position in. That mass group of 80% is chasing something that's dying off, right? They're chasing that higher high. You remember this? Does anyone remember when this went on? I mean, this was something people were saying. This was higher low, higher high, right? Remember this? We're going places. People were ready. Oh, this, don't worry, look at that, almost like a bullish engulf, and here we go, we're going to do it. This is the kind of thing we're talking about. You know, ultimately, that's the key. All right, so we're going to be responsible for our trading. We're going to take full responsibility. We're going to do it to such a degree to where we know that ultimately everything comes back to me. I'm going to be the one that's responsible, period. You got to make sure you do that. Stop studying the markets. What do I mean? Look, if you're pouring 16 hours a day to figuring out Bitcoin, if you couldn't figure it out in an hour, you're not going to get it in 16 hours, I promise you. Okay, study the losers. Go back in time, you know, kind of paint a picture. What happened here? What happened there? What happened here? What happened there? What happened here? What happened there? Can I figure out a way to identify these type of situations for myself, right? What happened here? What happened there? What happened here? You follow what I'm saying? If we make a habit of studying it, and across multiple time frames, the lower time frames are very helpful as well, because a lot of times the things that are happening on the lower time frames will happen on the higher time frames as well. And I'm not talking about fractal by nature. I'm just talking about the way they play out. You could study the losers on the lower time frame, because a lot of them are in high margin positions, things of that nature. I mean, sometimes you have Bitcoin makes like a 200-point move, and all these people are getting liquidated. How is that even possible? I mean, you're talking about something that has, it's $3,600, and it moves $200, and you have all these liquidations. What are these guys doing? I don't know. 50x, 100x, something insane. I mean, there are reasons, like if you have if you have a bunch of Bitcoin in cold storage, right? And you say, oh, okay, well, look, I want to go ahead and throw a couple Bitcoin on to BitMEX, and I'm going to do it at 10x, and I'm hopeful there's not going to be a 10% move, but I'm going to short it just to protect myself in case we should drop down, because if that's to occur anyway, I'm going to make money on the fact that I already have 20 long at the moment holding in cold storage. So that could be one element of when you go about it, and basically it's a little bit of a hedge. So in that situation, okay, that guy gets liquidated, and so be it. He was hedging his other bet anyway, so it was kind of net break even to some degree. But ultimately, these other guys are just, that's the crowd we're talking about. I apologize, but that's the losing crowd. Those guys that are getting liquidated, it's those liquidations that are moving the market. It's those liquidations that are doing this. I know you guys think like, oh, it was Bitcoin Cash. I'm just kidding. I don't even know what to call these guys. What do they call themselves? BCH, whatever that crap is. Ultimately, that little war, said, oh, hey, look, that's what happened. That's what caused this. It made some guys decide that a whale sold. Really? What is this, a series of whales selling? No, guys. If one whale, first of all, this thing started. Let's just go ahead and look what happened. I was on vacation at the time, right? But look at the order flow of this thing. This is days, by the way. Days. You telling me that this, forget this one. Bearish engulfing. Very bearish. Supposed to be bullish, yet bearish, followed it, right? Indecision. Gave you another signal. I mean, how many signals does this thing give us, right? To let us know that at least was weak. There certainly wasn't a reason to say I'm long here. What was showing you to be long in this situation? I'm not trying to be mean to anyone. I'm just making a point. What? Because we were on support? All right, that's fine. Well, I mean, technically, we're that support. What? Because we had a line? Well, first of all, those lines don't mean a whole lot, right? But if we were going to draw that line, wasn't it being challenged at that point? A line can mean something if you have some element of confluence with it, right? Otherwise, it's just you drawing a line. So if at this point, when you had got touched, there was some other multiple factors that made some sense for you to take a long, then so be it. And same for here. Well, first of all, not this one, because you wouldn't have drawn it just yet, right? So normally what I would think is that some of these people, they probably would have had this a little bit differently unless it was on a lower time frame. So I know on a 4-hour time frame there was something that was more along the lines of this, something like that. But still, there was plenty of opportunity to get down, even if it was here, and then even if it was there. You had to know to jump out, right? Even if you got all the way down here, get out, right? We knew that. My guys knew that. We talked about this. Hey, if this thing, we spoke about it breaking 6,300. If it broke 6,300, we're going to 3,600. Not maybe, for sure. That was the conversation we had, right? Why? Because I'm a genius? No. Was some advanced technical analysis in there? Yeah, it was. Did it have to work? No. But the idea was pretty simple. It was psychological in nature that, look, if we break, the losers are going to make sure we go here. This wasn't a situation where the winners came in and made the most money. No. Look at this. Remember these examples we gave? Where are the shorts at that time? Extremely low, right? Right before the death. By the way, I got the longs here. Look at the longs. Longs were in a decent spot. Relative, at least. Now, they weren't very high either. I remember that. And right now, they're creeping up higher. So, we were just in this long, unbelievably boring situation where we had this condensed coil and they were rocking us to sleep, and we all had conversations about that. But the idea is, relative to each other, we're in this situation where you had longs rising. It's not this simple, of course, but what do we end up having? Circumstance to where from this day, right about there, well, we were here, right? Let's go back there. After that little fiasco we had with Bitfinex and Tether. From that moment, what did you end up having? Longs rising, right? What did the shorts do? Falling. And what did the price do? Shorts falling, price falling, longs rising. Does that make sense to you guys? It shouldn't, right? So, I mean, the idea is that what were the losers getting ready to do? Take a bath, because it's the losers that move the market, right? Was there a large set of winners there? Nope. It was a small group here that were able to cash in on all that relative to the past several months. This was a small group. We can see that, right? We understand that. So ultimately, if we can study the behavior of the losers, we're going to be in far better shape over time. That's what we want to study. We don't want to study the market so much. We want to study what the losers are doing and then find a way to go against those guys at a high probability. Now, forget certainty. We spoke about that. We don't have to go too deep into that. The idea is that, some guys, what they do is they get frozen, right? It may not be you. You may overtrade, but a lot of guys have a problem where they just can't pull the trigger because they're just looking for such a certainty on a trade. And it's just, look, if you can get to a point where you're 50-50, but yet you're 3-to-1 on your risk to reward to risk, then great, right? You're going to make money. So start pulling the trigger. In those situations, keep your tight stops and know that, hey, you just need probability on your side, not certainty. And then, of course, invest in a mentor. If it happens to be me, I'll put my information up. You guys want to talk, we can just have a conversation. It doesn't have to be me, though, right? There's a lot of good guys out there. One thing is it may just truly not be affordable. And there's a difference, though, guys, between truly not affordable and, hey, I don't want to put any money out. Look, you're going to put the money out one way or another, unfortunately. You guys may not realize that. You might not want to accept that. That is, unfortunately, a reality of the situation. So I would tell you that try to put yourself in a position to where you're getting that thought out of your mind, because it doesn't make sense in any industry, in any sport, in any scenario, in any trade, I should say. You're going to be in a situation to where people understand that they have to pay money to somebody for their time to train them, to teach them, to be that ear, to put them in a position to where they can know that, hey, I got someone by my side, and that person's watching out to see where I'm going right, where I'm going wrong, kind of continue to point me in the right direction, etc. So ultimately, again, if that happens to be me, you can contact me on Twitter. Just go to do a DM, direct message seems to be the easiest. TrueCrypto28. We'll just have a conversation, right? If it's not affordable, we'll point you in the direction of someone else that might have some free options that are at least going to allow you to start thinking a little bit differently. So that's another thought on that as well. Anyway, that's it. This has gone quite long enough. Hopefully you like the psychology side of it, because the reality is trading is 90% psychology in my opinion, and if you don't agree with that, it's at least half, if not more. But ultimately, you want to at least start to accept some of the mindset here and understand it. I think I did a good job of showing you what I meant in understanding that, hey, you got to study the loser. That's the key here. Yes, TA is good, but if you could focus your TA around the loser and knowing where he's at, where he's going to pay the price, where he's trapped, where he wants to get out, right? Where he has to get out. And, the loser's thinking, I got to get in here because it's going to go there, and then panic and get out, right? That kind of thing, or get liquidated, those type of things. So in those scenarios, if you could start to think like the loser over time, it takes time, right? You're not going to do this overnight. And there are, of course, strategies to work on this. But that's it for now. Again, I've gone far too long. Hopefully you guys enjoyed it. We'll talk very soon. This is True Crypto 28. Mr. Anderson signing out.